We have with us today, my name is Nicolay, I head up the research team in DNB. And with us today we have Eric from Teekay, Apostolos from Tsakos, Bob Burke from Ridgebury, Brian from Euronav, and Lois from International Seaways. So we calculate today in our own research that about 10% of the crude fleet is tied up in call it supply one-offs. And the question is, for how long will this supply one-offs last? So that's what we're going to spend the first section on. I think it's fair where we are today to start with you, Brian. I think you deserve the start of this panel. I assume you have been talking scrubbers for most of 19.
Non-stop.
Non-stop. And now vessels are taking U-turns at the yard, not installing. I guess you feel slightly more comfortable today or the past 2 weeks than what you've been so far this year. So if you look at year to date, I think you've retrofitted about 80 scrubbers globally. There's 100 more to go on the VLCCs. How do you think this pan out?
Well, I'll go first then. I think we're obviously not in a position to speak in terms of what the guys are doing on the short term in terms of equalizing that balance between retrofitting and obviously trying to take advantage of the current very strong market. But we think this is always going to have an impact. What I would say is that the temporary dislocation you talked about earlier of supply, be it Iranian vessels, the COSCO vessels, whatever it may be, the retrofits have yet to really bite. So that's one thing we've been trying to get in our messaging, is that this is still to come. The real impact of this is still to come. And if there is some deferral of that, then it means it's going to be good for the rest of the winter cycle, because we're going to have ships obviously leaving the fleet. So we think it's always felt was a very positive feature, but obviously it does have some risk attached because of the off-hire that you're having to take depending on when you did that. So it's another positive feature, but our view would be it hasn't really been priced in yet. But I think the other panel of guys are a bit closer to it than we are.
So the current rate environment is not affected by scrubber off-hire yet?
We think we've yet to see it really bite.
Yeah. Anyone else like to comment?
I mean, I would say that Brian is correct in that, there are a lot of new buildings that were delivered with scrubbers, but the retrofits, it's really just getting underway. And I think that's an extra factor that is fundamental to the market, and it will continue to cause, less capacity to be available, and rates will respond.
But if ships now are taking U-turn at the yard, could we see then two times of fire in terms of first ships go to the scrubber yard and then they take a U-turn? They've been out for the market for a while, and when rates calm, they go back and you have another disruption.
It's all just math, right? I mean, if the rates are $200,000 a day and you can get a cargo, then you go. And if your scrubber costs $4 million, and you leave it there for a while. I mean, it's just math figuring out what the rate is now. If you go back in 6 months, and it's a summertime, and it's $10,000 a day, then you substitute 1 month at $200,000 for 1 month at $10,000, and you figure out what the extra fuel is going to cost you during that interim period, and you make your decision.
But how easy to cancel a slot? I guess you've ordered a slot, you've ordered the scrubber.
Well, the scrubber takes a long time to build, so there's a lead time for the scrubber. They deliver most of the parts. They never seem to get all of them there, but they deliver most of the parts to the yard. Seems to be a policy. And then you bring your ship in, and you can always, not always, but you would leave it there and come back later.
Okay.
Yeah, I mean, it's $200,000 a day, you can make a lot of adjustments.
What really made rates go or surge over the past week is the COSCO situation. Initially 50 VLCCs affected, subsidiaries only control 25. What's the status of this ships, and for how long will that have a positive effect on the tanker market?
Well, it's all accretive. All these issues that have happened in the past 6 months are accretive. And the COSCO thing has really been helpful, but it's like my wife telling me she was a half an hour late because they asked her to go back in and get something for me out of the refrigerator before we left. It's the last thing that, sends it over the top. But it seems to make the market go, but it's a series of, you like that one, huh? It took a while to catch. But it's a series of, what happened in the Mideast. It's, it's the scrubbers. It's the natural, what's happened started to happen with 2020. It's the delivery book has, filtered in. It's the restocking. It's all these things. And like in any market, when it squeezes, it finally pops. Right?
Yeah.
Absolutely, and the demand difference between Q3 and Q4 is dramatic in any case. Q3 is your lowest demand quarter of the year, and Q4, you're ramping up whatever, anywhere, over 1.5 million, 2 million barrels a day, right? So, all of those things start to come into play. And the one thing that we didn't mention is on top of the COSCO situation, then a couple of major charters rolled out and said, okay, no VLCCs that have been to Venezuela in a year. In the last 12 months, do we consider them to be fixable? And that was another, list of fleet of vessels that added into the complexity. So, you add all these factors together and, you make an inefficient market, which, on top of the extra demand, drives the rates.
And Unipack, and not just VLs, but Suez and Afras and anything else.
That's true.
But how does that work? Brian, you have some VLCCs on that, call it the Venezuela list. Can they trade?
Well, I understand Exxon took one of those so-called banned ships earlier today. So again, it's a market background which is constantly in dynamism. We took those ships on a U.S. government-sponsored Chevron waiver. So we're a bit perplexed to be sort of named on some of these lists as well. But it is, I think, as all both Lois and Bob have said, we're talking about short-term cumulative effects on top of what was a pretty good market anyway. The other message we want to get across, which I know everyone else would echo, is that the market's not been too bad this year. We've had pockets in March, April, where we had a counter-seasonal rally, another one in July, when the market got up to $45,000, $50,000 a day. Very unusual times for that to happen. That proved that the market supply-demand dynamics were pretty much in equilibrium. That's the bedrock which Lois and Bob have talked about, that has built that sort of popping. That's been the build-up, and that's been very important to get across to investors, that this hasn't come out of a clear blue sky. Some of these events have been shocking and have been shocking, but the base load of our market has been pretty firm.
Yeah, I think we all agree that we were on a good trajectory for pop-up in rates, but I'd like to just drill on the COSCO situation, since that sent rates 10 times in 10 days. So how many ships are still out of trade? You have, anyone has the number?
I think if the last that I've heard is about 25 ships directly involved in COSCO-related sanctions. On top of that, you have to add about another 40 or so that are involved in Iranian storage situations. And then you have probably another 20 or so being used as storage currently for IMO fuel, compliant fuel situation. So what I would like to note is that the COSCO-related and any sanctions-related vessels, it's not easy to get them back in the market as easy. I mean, even if the sanctions are lifted, it takes a while before those vessels are back into the competitive market. So we expect that, although it's not a permanent, but it's probably a semi-permanent situation. So we expect those vessels to be out of the market for a while, even if the sanctions on COSCO are lifted anytime soon.
I think one thing to add too is, if we'd had this panel 2 weeks ago, we would have been talking about more fundamentals around increased growth, around U.S. production that's benefited the VLCC market. It's benefited the Suezmax market. It's benefited the Aframax market steadily this year, quietly. We also see healthy refining margins, and we also see healthy refinery throughput that's attributed towards preparation for IMO 2020. So this is a little bit of a clash of a perfect storm, too.
We have 30 minutes left on the panels. We're going to talk about supply demand, but I think it's quite, if you just, we calculate that 20 VLCC equivalents are tied up in scrubber installation, and then you have 20 in IMO fuel storage, you have 25 COSCO ships, and then you have the COSCO situation on top, and then the Venezuelan ban. So it's quite extraordinary, at least we argue. In terms of the compliant fuel storage, we count 20 VLCCs are tied up in compliant fuel storage. Is this a price hedge? Is it an availability hedge? Or is it a fuel spec hedge?
I think Brian should start with that.
I wasn't aware that it was much as that, actually. In terms of compliant fuel, well, obviously we're very well with our IMO webinar we did a month ago on the 5th of September. We've got a ULCC with 3 million barrels of compliant fuel, nearly all straight run from the refinery, so not blended. We're very comfortable with that. Now we've taken a decision, we've been buying that on a progressive basis since February, in smaller parcels getting larger and larger. And we've done that from basically to de-risk our business. We've got a lot of inquiry, people looking at the P&L. We're looking at this from an operational perspective. It's going to be very chaotic in Q1, we believe, and maybe even to Q2. You're not going to know quite what you're buying from certain installations. We've bought at $447 per ton. That's compared to a spot price today in the sort of north of 500. We know what we've bought. We've tested it all on board ships, not in the laboratory. We think we've substantially de-risked our business. That's going to be 70 to 80% of our bunkering is going to go through Singapore, where the ship is. We'll start utilizing that next month. We'll still have to bunker, in particular in Europe and the States. But we've done this from an operational de-risking perspective. We're not trying to game the market or try and have some sort of play in terms of a spread. We would like to hedge that position. We have not hedged it so far because we can't find a reliable proxy. MGO doesn't do it, and a lot of the other fuels don't do it, which shouldn't be a surprise because this fuel didn't exist earlier on this year. So we're very comfortable with what we've done, but I think it's important to stress we're not trying to do it for some sort of capital gain or profitable gain. We've done it from a business risk perspective. I can't speak for the others, obviously.
So is it like you don't install scrubbers, but you hedge the price risk? Or is it availability?
It's having the availability. We know what we've got available and we know what we've bought. It's a quality and a availability issue. None of us are going to have any real indication of how this is going to play out. And in particular, we're going to have some uncertainty about the differences between the offers. So the BP will be different from the Shell compliant fuel for a time until we get that standardization. So that's what we're trying to protect ourselves against.
Yeah. One said to me yesterday that the compliant fuel price is 500, but today there is no demand. In January there will be a lot of demand. Mm-hmm. What will happen to the price? So you fear, Luis? Do you fear like availability is a risk that you mitigate today, or?
Well, for us, we are doing all of our modern VLCCs with scrubbers, so we are not worried presently about the availability of 3.5. Just what the market has. I think there will be plentiful, and the price will drop significantly. In particular, on the VLCCs, we can bunker in Singapore, Fujairah, the U.S. Gulf, major bunkering ports around the world. For the bulk of the rest of our fleet, we will, the Suezmaxes, the Aframaxes, the Panamaxes, we feel pretty confident about the availability of the low sulfur. The MRs, I think you have to, really be active in managing that MR portfolio to make sure that there's going to be low sulfur. You're going to have to bunker up. It has a much higher priority than it ever did for all of us as owners. And when you're planning your spot chartering, where you're going to bunker could actually drive the cargo that you take, and that is very rarely the case in our markets. So, it's we look at each ship. Everything has been planned for. The tanks have been cleaned steadily over the last year, so that we're ready to go.
Yeah, we all do the best we can, and there's going to be chaos. But I'm willing to absorb, let's say, 10, 15, 20% inefficiency in our fleet to have the rates go up 50%. That's, we're all going to have problems, and we're all going to absorb it. And as a consequence, ships will not run as efficiently as they used to, and we'll all be mad that our ship's off hire for 5 days or 10 days or whatever it happens to be. But on the other hand, we'll be a lot happier that the capacity is out of the market and the rates are up 50%.
Switching a bit to the demand side, we in our research, we have 1 million barrel higher crude runs in 2020. That's 2.5% on supply, on utilization. In previous cycles, or since 2010, there have been different fuel spec changes, and this is the largest one. And in the previous, we've seen that refinery runs has clearly output refinery additions. And so what's your view on call it how much more would IMO have an effect on the demand side? Is it 1 million barrel throughput, 2 million barrel, 3 million? Or the demand effect I hope I
I
don't
think we're there.
put anyone on the spotlight. So if anyone,
I was just going to say, I think we're there. I think we're already seeing that demand within the market space right now. Incrementally, it's really hard to predict, but you definitely do have a higher demand already around lighter, sweeter crude production, and you're seeing that trade volume coming out of the United States going to multiple locations. One that's quite interesting is the European refinery. They benefit, and we know that there's going to be a higher overall demand in Europe for distillates.
You know, when you look at how many refineries or what are the additions worldwide, you had more added in 2019 than what we've had in recent years. So, you know, China's brought on, I think it's around 700,000 barrels a day of additional refinery capacity, some of which is just coming online now. So from a crude perspective, we like to see that. You know, the Middle East is bringing on 400,000 barrels a day, and you know, that's super for LR2s, which the stronger they are, the less of those are feeding off the Aframax market. So if you look at the underlying preparedness of the refinery market, you are seeing the refiners bring on additional capacity to be prepared to crank out, you know, more of what the market needs.
I think this year you have a 40-year high refinery addition, 2.7 million barrel. Let's see if it's all going to be delivered. And the ton-mile perspective could be quite large when you see refinery additions coming in the Far East. Probably Middle East would like to expand a bit more on the product export. How to think about U.S. crude export in 2020? I think we're going to end up about a million barrel growth this year.
I think we think you'll start seeing that now. We think you're going to get a 4 million mark this quarter because you had 1 million barrels of capacity coming from the Permian to the coast, and that became operational in September. So that's a big boost. And I think the one thing we're keeping a very strong eye on is obviously all these offshore terminals and discussions with regard to take it to the next stage, because the next bottleneck will be at the port itself. But no, I think it's pretty clear to get it to 4 million and then to 5 million sometime in 2020. Because of that, you've now solved a lot of that bottleneck that we were talking about in the second half of 19.
So you see 5 million already in 2020?
There's the potential for, yeah, in terms of capacity.
As Eric was saying earlier, I mean, we're expecting, you know, more crude to reach the U.S. Gulf.
Is your mic on?
Oh, sorry. This one? Hi. As Eric mentioned earlier, we're expecting more U.S. crude to reach the U.S. Gulf ports. Eventually, we're expecting more Permian crude to be transported to the U.S. Gulf with all the new pipelines that come into play. So hopefully by the end of 2020, we're expecting a total of 4.5 million barrels of U.S. crude to be exported.
By end 2020?
Yeah.
Yeah, 4.5.
4.5.
And, you know, definitely, you know, going down to, you know, Corpus Christi and going out to sea, you know, now you've got VLCCs that are loading parked cargo at the dock and then going out to top up with Aframaxes. And when, you know, the agent that was taking us out to the VLCC got lost because the rapid infrastructure, all the tanks that are being built, you know, it's changing the landscape constantly. So you just see all this crude that's finally Epic. And there was another pipeline that just came on. You know, you start to see them come down and the storage is being put in place. The U.S. Gulf is going to be really big. I don't know if we'll get to you know, 5 million in 2020, but I hope you're right. And for sure, we're seeing significant growth in the exports.
Lois, who do you think is going to win the race? Who's going to be the center of that U.S. export trade? Is it going to be Corpus Christi?
I think so, yeah. Yeah.
So if you look at U.S. trade war has had an impact on the average sailing distance out of the U.S., it's just stopped growing. So I think the latest number we have, it was close to 7,000 nautical miles on average U.S. exports. Now it's come down to 6,700. Middle East is about 4.5. So it's clearly accretive to ton mile. Could probably then the refinery additions now actually boost ton mile again in 2020, or do we need a solution to the trade war?
Go ahead.
No, I think it's definitely going to continue to increase. I mean, there are a lot of places besides China in that part of the world that take our crude in. There's Taiwan and Singapore and a lot of other places, South Korea. So it should continue.
No, absolutely. And you see, I think it's one of the impacts that we really haven't focused on very much today. But, after the Saudi attack, I think that Asian markets are, look for reliability of exports, and they reach for Brazil, they reach for the incremental barrels coming out of West Africa and the U.S. Gulf, and all of that helps our ton mile.
Yeah, it helps the ton mile, and also the diversification of loading ports and discharge ports help create inefficiencies in the market. I mean, if you had all the oil came from point A to point B, the system would be very efficient. But with the uncertainty and the de-risking of getting oil from, one part of the world, it creates more load ports and discharge ports. And it's the same thing with the Exxon suspension of a lot of the ships out of Venezuela. Those ships will load somewhere. It just creates more inefficiencies in the system, which I think are as important as some small increase in ton miles that we calculate. So you have all these things in the system that are creating inefficiencies, and that drives the market as much as anything. People don't want to load ships over 15 years old. People don't want ships that are on the Exxon list. People don't want ships that are on the UNIPEC list. People don't want ships, from all different reasons, and suddenly the amount of ships available for any one fixture gets diminished, and the market pops. And as Brian said, then all of a sudden people have exceptions when they realize they got to pay world scale 237.5, and then it comes back down again. The world's not going to spend $7, $8, $9 a barrel to move oil across the earth. It doesn't work that way. So people will be squeezed and forced to pay for a couple of voyages, and then they'll find other ways to move the oil or other places to go to, or they'll start accepting ships that they didn't accept last week.